Welcome back. Now, annual consumer price inflation moved up to 3% in June, up from 2.8% in May. Food inflation drove the rate up, coming in at a 15-month high of 5.1%. PwC's chief economist Lullu Krugel joins us now to further unpack the print. Lulu, thanks so much for your time today. As mentioned, inflation ticking up slightly in June. Does this signal a shift in higher prices, considering that economists have priced in higher inflation in the second half of the year?
It doesn't really change the path from what we were expecting. So it's definitely still very much in the range of what we as economists were expecting. I think the survey that was done around amongst economists came in at an expected 3.1%. So it's actually a little bit lower than that. And I think most economists had the expectation that towards the end of the year, we would see inflation moving towards 4%.
Yeah.
So I must be honest, nothing to worry about at this point in time and to suddenly expect a rise here.
I mean, at the top, I mentioned that food inflation hit a 15-month high. How concerned are you about that? I mean, it's known that food inflation is usually really volatile, but we are seeing really a trend, upward trend that is in meat prices, particularly beef prices, on the back of the foot and mouth disease.
Yeah, you're right. Food inflation is currently sitting around 5.1%, so that is high. And given that it is a large part of the basket for a lot of South Africans, I think if you say to the average South African that inflation is around 2 or 3%, they will tell you, well, it doesn't feel that way, because of food expenditure and because that's something that we spend our money on regularly. So, as you mentioned, the biggest culprit at this point in time being stewing beef. So hopefully if food and mouth is under control, that should return to normal as well. It's not a long-term shock or a long-term factor that has caused this, like fuel price increases or something. It's a short-term instability, in particular around the meat prices and beef prices. So again, in the bigger scheme of things, I don't think it's a worrying trend, and that I think as consumers, we will all like inflation to be reasonably low.
Yeah.
But I don't think it's something to be worried about at the moment.
And talking about low inflation, then something else that's been really topical, Lulu, is the lowering of the inflation target, with the SARB governor, Lesetja Kganyago, really pushing for it this year. And it seems like, it's gaining momentum. There seems to be support from Treasury. What do you make of it all, seeing that inflation target being reduced to 3%, and the timing of it, particularly the timing? I mean, we've had critics saying that this is not the right time. The economy is not at a point where we can actually do that.
Yeah, that's quite a controversial one because, first of all, I'm a proponent of a point target. So I think it's better that we say it's 3% or it's 4.5% or whatever the case may be. Because if you work with a 3 to 6% range, it's just human nature that we always think, oh no, but my salary should increase by 6% because that's inflation, even if it's not. So I think that that point measure brings a lot more certainty around managing inflation expectations and can actually be quite useful. Should it be 3%? It's potentially also not too bad. If you think about that level of inflation, given where we are as a country and so on. However, there is something to say about the current economic situation. The SARB, however, does not have the job of growing the economy. And I think that's what the governor will tell you in no uncertain terms. That's not our job. As the SARB, that's not our mandate. Our mandate is, in fact, to control prices, and it's Treasury's mandate and job to grow the economy. So one needs to keep that in mind and just consider the different roles. So I do hope, though, that they do see that there's a potential window still for them to reduce interest rates further this year. And that, for me, is probably more important, and a bigger part of the conversation is, do they take that into account? Do they understand? Because we're pretty much at the bottom end of that inflation range that the governor is in any event tracking. So it will give them some room, and if they don't take it now, it will be very difficult to actually reduce interest rates further when inflation starts ticking up, which it will probably slowly do over the next couple of months. However, the one thing that the governor will consider is all the uncertainty from the US.
Yes, yes. And I was about to ask you about those risks and what they present to the SARB come next week, Thursday. Are you expecting another cut from Lesetja and the team?
So I think that the challenge that they are sitting with, if you look only at the numbers that we have in front of us as a country, I can say, yes, there's room for them to do another 25 basis points, and they probably have thought about it. But what they will be debating is how uncertain the global environment is at the moment, and if there's enough signs of uncertainty to say to them, listen, things might go completely different from what we are expecting now.
Yeah.
If the inflation expectations and the model, they always have very sophisticated models that they share with the team there, but they still debate it. If it shows a different story and severe risk, it might be a different conversation. We have seen inflation starting to tick up very slightly in the US, and we also know that that 30% tariff is coming into effect straight after the SARB's meeting, or we think it might, depends what President Trump decides to do this time around. So that is going to play into the conversation.
All right, let's leave it there, Lulu. Thanks so much for your time and just unpacking that print for us. That was Lullu Krugel, Chief Economist at PwC.